Hey everyone, let's get rocking and rolling because it is doomsday out there now. Kidding about the doomsday, but beware, El Presidente is speaking here at 9 a.m. So he will be on actually right now. Funny enough, am I watching it? Heck no. Think we got Jack coming on, government bailout. Yep. Don't call it a bailout, though. You can't call it a bailout. Come on now.
Hey,
You'll get in trouble. Jack.
hey, you got to set me up so my video will work.
Yeah, that's I don't control any of that stuff.
Where's
Come on.
Adam? There he is.
You know how it is, Jack. The whole team does all that good stuff. All right, I'm gonna grab my screen here. I don't know what I did with the Zoom.
How you doing, Lance?
Well, Jack, let me first. I waited, okay? And I apologize. It's kind of gloomy out here.
It is.
I waited. How long? 2-3 weeks? And last night I was very tempted to smoke this, but I waited for you.
Good.
So we're gonna heat the outside and let's give it a try. So this is Arturo Fuente.
858 Maduro.
That's it. I took it out the package. I've been chewing on it.
Yeah, nice.
So
I got a longer version this morning. I'm going to need a longer breakfast cigar because, in all fair warning, I got my 2 grandkids here. We rented a house in Tampa for little Jack's birthday.
oh, nice. And Dunedin area?
In Tampa.
Oh,
Yeah. I'm in Tampa. Next, he lives in Dunedin, and my wife rented this house. And my son Jack, he had his birthday on the 12th, and today's little Jack's birthday. And my granddaughter's here, and it's full of chaos. So if they come barging in, that's what it's going to be. It's going to be
Jack, I haven't even had breakfast yet. You know what my breakfast is?
breakfast cigar, baby. Nothing better.
I had an espresso at like 5 a.m. Went to the gym. I got some OJ,
Nice.
like a real Florida man. Hey, Jack, you live in what, Naples?
Yeah.
So
But
Jack,
I like Tampa, but I got to stay in Naples. My wife's family is down there, and she calls the shots on that thing. So I get to see little Jack all the time. He's only 2 hours away, and it's just a good time.
all right, Jack, you know what I'm gonna do? I'm gonna pull up the futures here to give everyone a preview. So let's explain what happened overnight. How about we do that?
Yeah, go ahead.
So basically, if everyone was watching, and I know this crowd loves the Academy Awards, so I'm sure everyone here was like Bill Ackman watching the Academy Awards show. But so last night, futures open 6 a.m. So what we're looking at is the S&P futures here. Futures rallied massively. S&P was up about 70 points because everyone see the screen right here. S&P futures were up about 70 points. I'll just do a 30-minute chart here. 30-minute chart here. We were up about 70 points because Janet Yellen came in Sunday morning saying there's no bailout, there's, everything's fine. And then Sunday night, they say, hey, everything's fine. We're bailing out. We're basically putting in a backstop to Silicon Valley Bank. Everyone who has accounts will get paid. Everything, even over $250,000, $250K will be insured. People can meet payroll. Everything's champagne and roses. Well, come this morning, here we are down 42 points. So we've seen about a 100-point reversal in the S&P futures right now.
Now, why would you say that is?
Well, I think people realize that, not people, because you got to figure the Sunday night future session is very, very low volume. I think people woke up to the news like, hey, there's still a lot of trouble in these banks. Basically, they try to cover up the headline saying everything's fine. When people woke up this morning, or when there's some volume in the market, they said, look, this is BS. But what's key is they already sold the market off already. I think a lot of people thought we were going to open green and then fade
Yeah,
as the US market hours opened up.
yep.
So that's key. What what are your thoughts on this whole banking cover up fiasco, we'll say?
First of all, that bank that failed was a very poorly run bank. Probably a kid 12 years old could have run that bank. And the way they did it was when people put money in the bank, they went out and bought bonds to, because they couldn't relend that money. And then as bond rates went higher, the value of the bonds they had went lower. And when they started to sell those off to make withdrawals, it was an ugly ending. But everybody in the banking community that runs all that, Janet Yellen, all these other guys, they need to have more oversight of what's happening, because that bank ain't the only bank in that position. There's a lot more banks in that position, and people hate banks and people don't trust banks. And all they need is a little tiny bit of a fear to start a whole nother run. And I think they got to do more to calm the fears and explain why that bank failed and why it may not happen to another bank. But, they're not clear about it. And Janet Yellen, I just have trouble. I can't concentrate on what that old man is saying, because it just looks to me like he cuts his own hair, and I can't listen to the guy.
Are you calling Janet Yellen a man?
Oh, I thought that's what it was. Are you telling me? Woo. All right, I got some homework to do, but I'm not trying.
You called Goldilocks, Jack. You might get canceled. You might get canceled over here already. Calling Goldilocks the man. She said we'll never see another financial crisis. She said the banks are fine.
Yeah. Well, she cuts her own hair too, so that's what I'm saying. I can't concentrate on what she's saying, because oh my God, we got to get better people in here.
Well, you have to think, though. This is what I always tell people. If you really want to be a government servant, right? Put your life in government. If you have to be a little bit crazy to do that, because if you were really that smart and really that business savvy, wouldn't you just run your own company and make millions upon millions of dollars, not wait for a government check, or not work 40 years to get a pension? And the only reason everyone else gets no more pensions anymore. We saw GM buy out their employees. The only people whose pensions are secure are the government people, by the way.
Mm-hmm.
And we're seeing that in the chat. Skip says, put your money in CDs, 5%, money markets, 5%. Me and Jeff have been saying this. There's no real reason to get into risky stocks when you could get 5% of your money in the bank on a money market or a CD right now.
What's crazy? The 17-week, you got to think about this. The 17-week T-bill is almost at 5.2.
Yep.
17-week. And then you got the 1 year. I don't even think it's around 3. I mean, it's just like everything that we looked at and counted on in the past, it looks broken to me. Everything
looks broken.
Everything looks broken. The data we're getting, it's not the same. The CPI, the PPI, the FBI, you never know how they're coming up with these data,
And by the way, everyone, look what's happening tomorrow. So I like going on Econo Day just for my economic calendar. If you think today's volatile, you got CPI tomorrow, 8:30 a.m. So beware. If you think the market is volatile today,
just
again,
wait.
this move is just off the banks strictly, right? The NASDAQ was holding up pretty good. To be fair, and I know this is something myself, Jeff, we've been harping on. The NASDAQ stocks, obviously not having a lot of correlation with the banks. Yeah, there were some stocks like Roku, Billy, with a lot of money in Silicon Valley Bank. But the NASDAQ, even last night, was up almost 2%. Now it's only down 0.5% compared to, let's say, the Dow, which is Dow futures are down 255, S&P futures down nearly 1% or so. So the I think the play going forward, if you want to get long, maybe you look at some NASDAQ uncorrelated stocks to the banks, but everything else, usually when you have one bank, like you mentioned earlier, there's more, there's never just one cockroach.
Nope. Not just one.
And,
So,
and we,
not to change the subject, but you remember that Roblox trade we were talking about?
oh, well, hold on, Jack. You gotta, so everyone here, to give you a little background story. Let me set you up for this Roblox, okay? Me and Jack were in Jacksonville, right? We were together there a few days. And, we don't work, to give you a background, Jack's in Naples, I'm in Tampa. We hardly ever go to Jacksonville, right? We don't like sit in a room with everyone else and stuff. We're independent traders, right?
Sure.
So I'm with Jack. Roblox has a big earnings gap up right here, right? Remember that day they had earnings squeeze? I go to Jack in the afternoon. He goes, I just bought some puts on Roblox. And I go, oh, wow, this is very contrarian. I thought Jack did more conservative stuff. I go, what puts did you buy? He goes, the weeklies that expired tomorrow. So ever since then, I was like, Jack, you're my kind of guy. But go ahead about Roblox.
Look at this chart though. Like, okay, so I bought the 44.50 put. And as a former NASDAQ market maker, I can tell you when you see a gap like you have right there, good news can make a stock go up, but it can't make it stay up, right? So that was my bet on that. But since that happened, and this is a strategy I want to tell you, Lance, because this is perfect for you. So I did it on CRM, right? Maybe you pull up CRM.
Yeah, they just had that
huge,
huge move on earnings.
I think this is one of the biggest scams out there. So again, it popped up to 190. I bought the 190 put, like an at the money put on a gap up, and then just go fishing, mess around. Next thing you know, old Jed's a millionaire. So this strategy of, hitting these gap ups and buying a put at the money, what looks like at the top, it's going to go down. And I'll just tell you, like, as a former NASDAQ market maker, when good news came in, the brokers would bring in an order before the market opened, and it wouldn't be on a limit. It would be an order to buy at the market, however many shares was on the ticket. So as a NASDAQ market maker, you're going to gap this thing up, fill all those orders. And then and then you got the short covering guys as well. And then you got the greedy guys that just can't wait. But once all that buying is out, it's got nowhere to go but down.
Jack, that's a perfect example. Is a lot of those growth stocks, they had a big gap up when the market rallied, and then they filled that gap quickly to the downside. I mean, they quickly filled the gap right down lower. Look at all these gap fills in stocks. You could find Shopify, another one, right? Breakout, gap fill. Disney, big earnings gap up, fill. Everything got faded.
So do we get anything today? Do you look at it? Do you look at, like, I don't have my normal setup because I'm in this rented house, but do you see anything gapping up? Like, I like to look for something
gapping up
before the market opens, like 20%, something ridiculous on earnings. And it has to be a higher price stock. Some of the stuff that's at 4 or 5 or less than $10, it could have a big gap up, but you don't get the big fallout after that. And like Dinosaur Skip saying here, I avoid buyouts because if the news is buyout, the stock's not going to come down. It has to be.
And the options go so wide, you can't trade.
Yeah, they go crazy. You can't make anything on a buyout. But it's an overreaction is what it is. And I like to react to an overreaction. That's the simplest way I could say it. But this would be a good strategy for you, Lance, because you're up and on it early. Just look for these gap ups, and you see one's up 20 something % on a high price stock that's got a lot of psychological drop. Boom.
I don't think we're getting a lot of gap ups today. Maybe some biotech names I saw, but usually the biotech, usually that's news specific on a drug or something.
Yeah.
But I mean, we really don't, besides prevention bio, there's no liquidity. CGen, there's no liquidity in these options. No. Really, the only thing gapping up today is the gold stocks. The gold and silver stocks are getting a huge move to the upside because, well,
Banks look
so much
scary.
fear in the financial system, right? So people are seeking, if you look at like gold futures just went from 1820 to 1900 plus now. So, I mean, I can't stand in front of gold and short gold though. I think gold is, especially in a time like right now, I think gold's too bullish to sell the gap.
I hate gold.
It's a big moving contract, or silver, even bigger. Hey, how are you? Good, good. But I do like the metals here because obviously what's happening in the banks, especially the regional banks.
Yeah.
I mean, look at this move in KRE, the regional bank ETF. Look
Yeah.
at this move. I
Look
mean,
at
that is doomsday if I've ever seen it.
Now, I'm not a big proponent of buying stuff that gaps down. I used to do
Either,
that,
no.
but I don't do that anymore. I'm just more on the gap upside. And
Well,
it's so much easier because when you're a market maker, you can do the actual stock. You can do it in the pre-market, this and that. You can short and buy thousands of shares as long as you're flat by the end of the day. But I'm not a NASDAQ market maker. I'm only managing my own money. So it's much easier just to buy a put option than it is to short or try to short 1,000 shares. That's impossible when things are fast moving. But anybody can buy an at the money put. It's a piece of cake. You can get into these for less than $1,000, and when it works really great. And when it doesn't work, you just sell it.
Hey, Jack, wow, look at this volatility, by the way. If you look at KRE, and this is, and everyone here, just beware, even though you're seeing these crazy moves in stocks, what I want to do is show you guys just how volatile. So, me and Jack mostly trade options, right? But normally if you would see, let's say like a 3, 4, 5% move in a stock, especially like some of these bank stocks, like KRE or XLF, that would be huge. You buy a put, the bank stock's down 2%, your put's up 100%, right? Let's say normal. Now, the market makers are implying such massive moves in the banks. Look at this volatility in KRE. It's more than tripled over the past 2 days. So the price of the put options, or even like XLF, right? It's up nearly 3 times.
Look at
So
that.
the price of the options, puts and calls, like KRE is, they're implying nearly a 10% move this week. Yes, the stock's down about $4 pre-market, $5, but even the 45 puts are 60 cents, or they were yesterday. And XLF, you're getting about an 8% implied move. So the options are taking into consideration just how volatile the market is.
Yep.
So remember that when you're trading the options, if a stock's normally moving 1 to 2%, and now you see it move 4 or 5%, the options are taking account for that. So you really, if you're using stop losses, widen them, right? But also too, if you're going to come in and put, real money on the line, scale down that size because volatility is just exploding. Okay.
I see one guy in the comments talking about, Jack does credit spreads. I do that with bigger money. So just to explain to you guys, something where I have a really super high probability, I'm going to put more capital into that. Whenever I buy a put or buy a call, I'm willing to lose 100% of the money I put into that trade. So I'm going to allocate maybe 1 to 2% or most 5% compared to what I normally would allocate. And even though I'm willing to lose 100% if I buy a put or a call, I'm going to use kind of like what I call a mental stop, because I don't like to put a real stop in on the options market. So if it's clearly not going to work my way, I don't mind losing a few shekels. I'll cut it at a 20 to 50% loss, but I never put in more than I can afford to lose into the trade. And I think if you do that, you're going to feel a lot better about how you allocate your capital to trades.
Yeah, I agree with that. When you do high probability trades, you can put, like, let's say, for example, I go into JP Morgan, right? Because volatility is going to be sky high, right? Look at the volatility, how sky high it is. And let's say I want to sell, let's say, a bear call spread in JP Morgan, right? Let's say JP Morgan's down about $1.50 pre-market. Actually, let's use Bank of America as an example. Better example here. Let's say Bank of America. If I want to put on, let's say, and Bank of America is down about $1, a little over $1. If I wanted to do like a bear call spread in Bank of America, let's say the 30-31, right? I get $1 for the March 30 calls, and then I'm going to buy the 31 calls for about 50 cents. So I'm going to get about 50 cents on my money. So risk $50 to make $50. That's actually really, really nice right now, right? As long as the stock doesn't rally over 30.5.
Now, the other way to look at that is I like to look at the difference in strike prices. These are $1, right? So if you're using $2, are you using $1 difference or $2 difference in strikes here?
I usually like using $1 just because it's easy math.
So if you got a quarter, that's 25%.
That's not bad at all. Jack, I could probably do the 31s, sell the 31s, and buy the 32s.
Yeah.
And I could probably get a quarter, I would assume. Yeah, look at that.
Yeah.
Exactly a quarter.
Yeah, that's insane for March 23rd. How far away is that? Which
March 17th.
Oh my God, that's insanity.
You know why? Because let me do it here. The 31s sell.
It's crazy.
By the 32s. I'm basically getting 25 cents for the bear call spread. That's insane right now, right? The issue is, let's say it rallies over 32, I lose $75 out of my $20.
Or you could cover your short leg and stay long your long leg.
Yep.
It really rips through it. I took what would have been a loss on a credit spread and had some of the biggest gains I ever had by staying along that long leg in the unlikely event the stock rips through your strikes.
Right. When volatility is high, and usually I only trade directional, but when volatility is high, you can really get some crazy credits for selling options. But historically, though, we've had such low volatility, the VIX has been 20 or below, where you really haven't. So actually buying calls or buying puts has been more favorable.
Yeah. I've still been a big seller. I've been selling, like last week, I sold the 98 Amazon call and bought the 99 Amazon call. And I put that on Tuesday for Friday's expiration.
Oh God.
I just can't believe how far out of the money I can get on Amazon and still make a few shekels. Like, I think that was a 9% trade last week. Selling the 98 call, buying the 99 call for last Friday's expiration and making 9% in 3 days. Now I love that. That's my game right there.
That's fantastic. So we have some people in the chat asking about Schwab. Schwab gapping down massively pre-market. Gang, all these banks, okay, there's been the stock was $44, now $55. Volatility is super high, but you got to also understand these names are moving crazy. So it's not like, oh man, I wish I would have bought a put or all that stuff. You're going to continue to see these wild moves, but just know the options market, like Schwab, look at this right here. Schwab is implying an $8 move just for this week. $8.
That's insane.
Over $8 actually. The 50 puts are $1.25. That was Friday.
Now, do you think people think that there's going to be a run on Schwab like there was?
I wouldn't be shocked. I honestly, I'll give you an example. Like I saw the SoFi getting crushed and all these little banks. I'm about to make a bank run myself. Right. I'm about to go to the bank and get a lot of money out. I don't care. I'm not taking chances.
Just try. I had a business in Colorado, and at one point I had to get 10 grand out of that bank, or 14 grand, whatever. It took me a half an hour, and I had to threaten to call the cops on them. Wow. in Denver. No shit. You can't get your money out of a bank, and just go try to take 50 grand cash and deposit it. They don't want to take.
No.
They just want to charge you fees. You can't even get your own 10 grand out of the bank. And she's giving me this line, oh, we only keep so much on hand, blah, blah, blah. Well, that's the kind of exact same thing that makes people scared of banks when they give you this bullshit answer. When you go in and try to get your own money out, they act like it's their money. So having a run on a bank is almost impossible. And listening to Mark Cuban and all of his buddies, they had, 50 million, 100 million in that bank.
All that.
Anyway,
But even the stocks, like a lot of people were like, oh my gosh, Roku's got 26% of their cash tied up in the bank. Well, you would think Roku would and all these stocks would get crushed this morning, right? But they're barely even down. Like the Rokus, the Billies, everyone thought these companies were going to get screwed, but the Fed or Bill, not Billy, but the Fed came out and basically said, hey, we're going to back you guys. We're going to give a backstop and everyone's going to be fine. I mean, I even had one of my payroll companies, one of the companies that I do payroll through, they were clients of Silicon Valley Bank. And I got an email this morning say, hey, payroll is going to be delayed.
That's the issue right there, is they may save this bank, but any corporation that uses that bank, I guarantee you they are not going to make payroll this week. They are not.
I'm not. I'm not. I got it. They said, hey, give us a call or wait like 5 days and hopefully payroll goes through. So here I am wondering, damn, what am I supposed to do? Thankfully it's not a lot of money, but at the same time, if I had, let's say, like 100 employees and I had to tell them they're not getting paid, that's crazy. That's we always talk about, the rich, the rich folks out there, getting it, being protected and being elite and stuff like that. And I get this, should the banks get bailed out and should, everyone suffer? I mean, part of me says yes, but you also have to understand is the people who are affected are the workers, the tellers, the kid who's 22 years old who just started a job. When they're not getting paid and they got to pay rent, they got to pay food and stuff like that, then it really starts to trickle down and cause, obviously unemployment, but also two, these people can't pay bills. That's what really hurts the economy. When you have hundreds of thousands of employees that are taking the hit off bad management, management of these banks. Like the Silicon Valley Bank CFO used to work at Lehman Brothers. I mean, if you really want to realize just how bad and how corrupt these banks were, I mean, they were crooks to begin with and bad managers and selling millions in stocks. It just, it's just very sad that they're going to be okay, but yet the people who have to pay rent, or pay their bills in the next couple of weeks aren't going to get paid. That's where
the landlord suffers, right? And then they can't make their car payment, then their credit takes a hit. And it's a bad thing. But the other thing is, people don't know how many other banks are in this same position because they're so good at hiding their problems, but this can't be the only bank is what people are thinking. So I think we'll see a lot of fear, but again, trying to go in and can't get it out. I see people on here saying, well, if you make an appointment with your bank to get your money out, it's no problem. What? That's not a bank run making an appointment. I ain't making no appointment. I want to drive up and get the money out. I don't want to make an appointment to get it out. They still wouldn't give me all of mine. So, what am I going to do? I got to just
my money. I want it now. But Jack, I got to run. I thought I had someone on the team send out the wiretap pre-market game plan, but apparently no one did. So I got some trades on. I gotta watch this morning. Jack, do you have anything upcoming before we wrap up?
I got another presentation I'm going to give on my favorite strategy today at 10 o'clock. So hopefully everybody on here will get a link to that. I'm going to go live on that in half an hour. So yeah.
And what kind of strategy is it? Just
it's my 3-day cash machine. It's where exactly what I did with Amazon, where I'm selling one option, bringing in that money, and then I'm spending less money buying a further out of the money option, and the difference is my profit.
So are you doing bear call spreads, or are you doing bull put
calls right now? So the beautiful thing about this strategy is that it's what I call market driven. And so instead of just trying to jam a strategy into the market, I first look at the market conditions, bullish or bearish, and then I'll go with a bear call if it's bearish or a bull put if it's bullish. But since these weeklies came out, this is like 2011. I've been doing it every single week since then, and it's just been awesome. And Ruth, I think they'll drop a link into you. May see one in your email. But yeah, Rudy, I'm gonna lay in there hot and heavy on those options contract. I got one guy that's doing this with me, and he does about 1,000 to 2,000 contracts every time.
What?
Never mind. Yeah, he'll spend $300,000-$500,000 on one credit spread.
In the weeklies?
He puts it on for Tuesdays, for Fridays expiration. It blows my mind. He sends me his his a snapshot of his account and stuff like this. And, it just kills me how much people are making. And no one really sees this because the options market is kind of like a shadow market. People are seeing the stock market. It's only guys like you, and what you're teaching people is where they can look into that side market, which is the option market, which is really where if it was last year was the hardest market I ever traded in my life. And if it wasn't for options, I don't even know if I'd still be in the game. I mean,
you can't just trade stock. There's no way you can trade stock
impossible.
anymore.
All right, man, I'm going to let you go. Get your stuff set up. It was great being on here with you, Lance. Love seeing you. And
Yeah, awesome, Jack. I got my screens over here. So we're gonna wrap up, everyone. Adios. Beware, volatility is insane. So scale down position sizes. It is blood in the streets out there. So use proper risk management. All right, I'm out. Thanks,
come on,
Jack.
put it on, dog. See you.